Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patron, Ister Gray. Thank you for choosing to support the channel. As we've often said, things can happen fast in Tesla land, and these Q2 numbers are a great reminder of that. Tesla Energy crushed its prior deployment record, and it brings with it some implications for Tesla stock going forward. Analysts like Adam Jonas are saying they're admitting they were not bullish enough, calling the energy number for this quarter a show stealer that was twice their forecast. There's also a lot to break down with this delivery number that also far exceeded the whisper number, and as predicted, the market liked it. Although, if it's a sharp market, I think they'd be liking the energy figure even more. On the auto side, Tesla's production came in at 410.8 thousand and deliveries were 443.9 thousand, meaning Tesla cleared over 33,000 vehicles from inventory. This should mean that Tesla's global inventory from a days of supply standpoint should be back down to around 20 days from near 30 days where it was exiting Q1. And as we said after Q1, we needed to see Q2 play out because Tesla's production in Q1 was 46.5 thousand units higher than the delivery figure. Naturally, there was debate about if those vehicles would find buyers throughout Q2, and this number proves yes, they did indeed. However, I don't think it's all roses here, as Tesla's production was down 5% quarter over quarter, coming in 22.5 thousand units below Q1. And then it gets a bit worse because Tesla's production in Q2 of last year was 479.7 thousand, meaning year over year, Tesla's production is down over 14%. So clearly, Tesla factories are operating at less than full capacity, and the Q2 numbers this year include the Cybertruck ramp, and we can't use the Model 3 refresh as an excuse for low production because throughout much of Q2 it was back to normal levels. So I'm reading Tesla's production levels as them being a bit cautious so as to not overproduce, meaning they may have slightly muted demand expectations heading into Q3 and Q4. On the bright side, Tesla's inventory sitting around 20 days of supply does not factor in Tesla's cars in transit. Remember, it takes time for a car to exit one of the factories and ultimately make it to the end consumer for delivery, so anyone arguing Tesla has an inventory problem, I believe, is sorely mistaken. Tesla's far below the industry average, which was 50 days of supply and higher, and as Tesla grows with more locations, it's actually going to need more vehicles available on site for customers to experience. One other thing on deliveries, since the other models category now includes Cybertruck, and the Cybertruck was likely between 10 to 13,000 for production and delivery for the quarter, that means Model S and X sales are a bit below the 15 to 20,000 quarterly figure that we would like to see. But Cybertruck is on track to more than make up for it, and with each passing quarter, the Cybertruck margins will get better and better as Tesla reaches scale. And look, there are headlines out there about a disappointing quarter for Tesla, and ultimately that just boils down to expectations. Zooming out, it is true that year over year for Q2, Tesla's deliveries are still down about 5%, falling short by 22.1 thousand units. But the only expectations that really matter are Wall Street's, and Tesla did exceed those materially. And shout out to Brian from Futuraza and James Cat for being the closest retail investors on the delivery numbers with predictions of 430,000. This time around though, the Wall Street consensus won the day as that final estimate was 436,000. But all eyes per the usual will be on Tesla auto margins ex credits, and this number should see a boost with a nice delivery bounce quarter over quarter. An extra 57.1 thousand units delivered in Q2 compared to Q1 with fixed manufacturing costs should lead to positive margin tailwinds, and free cash flow may come in strong as well given Tesla's reduction in inventory, but the final free cash flow number will depend on Tesla's cash outlays for the quarter, as we know they're spending heavily on AI and compute. On the energy side, I went through a little analysis to contextualize the 9.4 gigawatt hours hours of battery deployments on X. I'm not going to get into it here, but the TLDR is that this number could translate into about $5.3 billion in revenue and $1.3 billion in gross profits for Tesla Energy. Previously, Tesla Energy's record quarter for revenue was $1.6 billion, and the record for energy profit was $403 million. I did use the assumption that Tesla's average selling price for the Megapack was $2 million throughout the quarter, but throughout Q2, Tesla was gradually lowering the price of the Megapack, and currently it's all the way down to about $1 million per Megapack. We have to remember though, Tesla will not actually recognize these revenues and profits until a future quarter once certain project milestones are met, but they are going to hit at some point in the foreseeable future, and this should be a great reminder of what Tesla Energy is capable of and why we've been calling it a sleeping giant for years. Just wait until Tesla ramps up its Shanghai Megafactory next year. Some are saying Tesla's Megafactory in Lathrop is already operating at full capacity since 9.4 gigawatt hours annualized is 37.6 gigawatt hours, and Lathrop's capacity is 40 gigawatt hours. But remember, that 9.4 gigawatt hour number includes Powerwall, and it's likely that Tesla produced some Megapacks in Q1 that just didn't get deployed until Q2. Plus, on the Q1 call this year, we learned Lathrop is ramping as planned. Tesla has its second general assembly line now ramping, allowing them to increase the Megapack rate from 20 gigawatt hours per year to start this year up to 40 gigawatt hours per year by the end of this year. So we're well on our way, but I would not say Lathrop is at full capacity just yet. I like how Vacay framed it on X in terms of auto revenue. Using a bit different numbers though, if Tesla Energy does indeed generate around $5 billion in revenue from these Q2 deployments, that's equivalent to the revenue Tesla would earn from 100,000 cars at an ASP of $50,000. And as we know, Tesla Energy currently has higher margins than Tesla Auto, so not too bad for just a car company. And finally, that does not even account for Tesla Energy's backlog or its reserve. Tesla is building up revenue and profits that are recognized in future quarters, and that means each quarter Tesla will be recognizing some of that reserve from prior quarters, which after Q1 sat at $3.86 billion. Looking at this chart from Sawyer for my visual learners, it appears as though the Tesla Energy coming out party has finally begun. At least for now, the Tesla Megapack ordering page is now live again, so that's how we can see if we drop the quantity to 1, we can see the estimated price is roughly $1 million. Again, it depends on the state. Which means yes, year over year, Tesla's Megapack pricing is down roughly 50%, as for part of 2023, it was $2 million per Megapack. You know how we've read some articles about an oversupply of battery cells coming from China? Well, that's most likely the primary driver of Tesla lowering costs to this level. And even one of the sharper Tesla Energy analysts out there, in my opinion, Matt Smith, said that the new number is shockingly low. Now we're going to have to wait until Q3 and Q4 to start to see what Tesla Energy margins might look like after this big revision, because again, most if not all of Tesla's Megapack sales in Q2 were not at that $1 million price point. There was a time last year when the Tesla Megapack backlog was about 2 years out, but as it sits right now, it's roughly 3 quarters out. So this Tesla Energy deployment number for Q2 was absolutely incredible, but moving forward, we have to cap some of our upside with this new Megapack pricing. On X, Elon replied to whole Mars, but it was not kid-friendly. Elon did say, once Tesla fully solves autonomy and has Optimus in volume production, anyone still holding a short position will be obliterated, even Gates. SMR said Tesla delivers a few more vehicles than expected, plus 9%. Tesla on the cusp of autonomy, down 50% from all-time high, down 8% year to date. Can't wait to see what happens when people figure out robotaxis are happening and the implications. To which Elon said, yeah, this is small relative to vehicle autonomy and Optimus. Dan Ives said the new bull run in Tesla has begun in our view with the mojo front and center for Elon with a historical robotaxi day August 8th and demand turning around for Tesla, most undervalued AI play in our view. And Bloomberg highlighted the 3-month call skew, which measures the premium of call options over puts, is the widest it's been since February 1st, 2021. Translation: Tesla option traders are as bullish as they've been in the past 3 years. Just so you know, a Tesla option with a 25 delta would just mean that for every $1 that Tesla stock price moves, the option value would move by 25 cents. And given every option contract is for 100 shares, that would mean the expected move in your position would actually be $25 for every $1 move in Tesla stock. Another way of saying it, if the option has a delta of 25, that means it has a 25% chance of ending up in the money. What do you know? Canaccord Genuity decided to raise its Tesla stock price target to $254. Wonder why they did that today. But more importantly, they said one metric is going to stand out head and shoulders above the rest, that one being Tesla's FSD take rate. They're autonomy uber bulls, but they believe in its current form, Tesla would be best served with another FSD price reduction. But we'll see, maybe FSD take rates are through the roof. Unfortunately for George, I'm not sure we're actually going to get that number. And as Sawyer highlighted, cumulatively since Tesla began production of the Model S back in 2012, with these Q2 numbers, Tesla is now over 6 million cars delivered, sitting at 6.2 million. And just a little fun fact, I don't think it's official yet, but based on some estimates from Reuters, they're saying BYD sold 426,000 full EVs in Q2. Meaning for Q2, Tesla once again has the full EV leader crown. Taking a look at some more feedback for 12.4.2, Dirty Tesla posted a video saying it took him 40 miles, needing only one accelerator tap the entire drive. Zach said he took it up the canyon to pick up lunch and it was the best drive up this narrow canyon he's had on FSD to date. Stayed in the lines perfectly and at a great speed, way more confident compared to other versions. Balancing those out from an OG tester tech geek, he said there seems to be minimal recognizable progress with FSD since 12.3.6 came out, and he's someone who's been using 12.4.1 and 12.4.2. But in the comments, Rocco said it was a significant improvement for me. I think it depends on the area. My speed limits were terrible before and a slew of other issues that have all improved. But in the comments, Tech Geek did say that 12.3.6 he would rate an 8 out of 10 and 12.4.2 he would give a 9 out of 10. James Locke said went for a longer 12.4.2 drive around Santa Clarita and it didn't go quite so well. Had a safety intervention, ran a red light, and completely missed the navigation route as it did not move over lanes quick enough. So as you may expect, there are still mixed reviews when it comes to 12.4.2. Elon did repost Holmars saying, yeah, FSD's awesome. Once you use Tesla Autopilot FSD for commuting, you won't use any other car. Honestly though, for somebody like me, I wouldn't want any other car even if Tesla didn't have FSD at all. Frida Duan, who works at Altimeter Capital, had a great write-up on the autonomy space. She's now tested almost all of the automakers, both Level 2 and Tesla's FSD. After that, here are some of her thoughts. Talking about some of the major Chinese brands, overall they exceeded my expectations. The rides were not overly cautious and handled complex situations quite well. But nothing compares to Tesla's approach. I see imitation learning and end-to-end as the only effective approach for self-driving. While Chinese peers perform well on main roads, they struggle on frontage roads due to reliance on high-precision maps and rule-based methods. Despite that, Chinese EVs' self-driving capabilities are far ahead of those from the US and EU brands. I doubt any Chinese players can profit from Level 2 self-driving, not because it's not useful, but because it's hard to differentiate and price wars dominate the market in China. On the robotaxi scene in China for companies like Pony, Didi, and Baidu, the user experience is nearly perfect, but expansion is the real question. Chinese robotaxi companies are very sophisticated. Interestingly, most companies expressed a preference not to operate fleets themselves. They aim to be asset light and let fleet managers handle operations. China has a very clear approval process driven by data, autonomous driving distance, fully driverless distance, intervention rate, passenger ratings, etc. So, according to Frida, many Chinese automakers are making great progress with tech like Level 2, and some of the robotaxi players are great, but the same questions about scaling exist. And most importantly, Tesla is still in a league of its own when it comes to actual self-driving. I value this opinion opinion from Frida, who has now experienced all of these different technologies in China, a lot higher than somebody just watching videos of experiences online. Giga Berlin has appointed a new head of production, Christian Adrian, who's been working at Tesla now for the past 4 years. Tesla said Christian will be responsible for all production processes here at the factory. The only exception is the cell division, which is currently done exclusively for the Cybertruck. The last update we had, Giga Berlin was making parts of the 4680 cell and then shipping them to the United States for final assembly. Giga Berlin's plant manager Andre Thierig emphasized the purpose of the reorganization is to increase production efficiency. On X, Alex shared a study from the German Center of Automotive Management. Their study said that BMW was the most innovative automaker globally, to which Elon shared this German phrase, which translated on Google gives us dumber than moldy bread. So if that's the saying, how could I not share that? According to Handelsblatt, VW and Rivian could now significantly expand their partnership. Not only are they working on that software and electrical engineering collaboration, but now they're saying that they may be working on hardware and production together. Both the hardware collaboration and joint production are being discussed. In particular, VW's US electric brand Scout could be included in the partnership with Rivian. GM released some Q2 data, and for full EVs, year to date, they've delivered 38.3 thousand in the first half of this year, 21.9 thousand of those coming in Q2 alone. In Q2, it was the Lyriq with 7.3 thousand sales, and the one I've been wanting to see, the Chevy Blazer EV, did 6.6 thousand in Q2, up from 600 in Q1. The Hummer EV actually sold 2.9 thousand, up from 1.7 thousand in Q1. So for GM in Q2, the Lyriq, the Blazer, and the Hummer were the only EVs over 2,500 for the quarter. All of the rest were below 2,500, which includes vehicles like the Silverado, the Bolt, and the Equinox. Some quick thoughts on Tesla stock, because I know there's a lot of hype right now out there, and it's totally understandable. Tesla stock is now up about 65% in just over 2 months. That's certainly worth celebrating if you had the proper positions on, but I just wanted to point out Tesla's forward PE now sits at 96, based on expected 2024 earnings of $2.42. This reading of 96 for Tesla's forward PE would be the highest in the past 2 years. Now, we never make any decisions based on one metric alone, but what I wanted to say is that at some point Tesla is going to have to start earning its way into its valuation. But it's very true, and we've seen it before, both on the upside and the downside, the market can remain detached from the fundamentals longer than one would like to admit. At the end of the Adam Jonas note, he said, as AI acceleration spurs a multi-generational increase in energy demand, electricity generation, and data center investment, we believe investors will begin to pay more attention to Tesla Energy. Little more than 2 weeks ago, our clients were preparing for shareholders to reject Elon's comp plan, potentially setting up a change of management and strategy, compounding many months of negative news flow. Fast forward to today, and clients are beginning to ask us about positive catalysts into second quarter results and beyond. We're getting asked for our proprietary Tesla Energy model and even our humanoid robot addressable market model. Is this the same Tesla from early June? We know there are times with Tesla stock where it seems like nothing is happening for the longest of times, but don't ever forget that then things can happen very quickly. And in an attempt to keep us grounded, if you look at Tesla stock historically after the crash we saw last summer, Tesla stock has a run-up and a pullback, then a run-up followed by a pullback. And right now we're in the midst of a run-up, which eventually will most likely be followed by a pullback. But Tesla could absolutely have more room to run, and if sometime during the month of July it can actually push into the 260s and break out of this wedge, then things could definitely get interesting. And by that, I mean 300 would be squarely on the table. Now, as always, I hesitate to even get into this on the surface level because none of this is financial advice, but I think it's fun to make predictions, and over time, I think it's a great way to sharpen your skills and try to continue learning. Just know there's plenty more where this comes from, and I'll just say coming soon, TM. Tesla has now extended the free FSD transfer 1 extra month. Now it's going to expire September 30th. My upload schedule for the rest of the week is in flux. Sometimes around the 4th of July, the news is incredibly slow, so I'd recommend signing up for the Electrified newsletter linked below. It's free. If I had to guess, I would say Wednesday newsletter, Thursday no upload, and then Friday upload, but we'll see. Tesla stock closed the day at $231.26, up 10.2%, while the Nasdaq was up 0.84%. It was the highest volume day we've had in a long time, potentially all year, trading 123 million shares above the average volume the past 30 days. Tesla's market cap now sits at $737 billion. I hope you guys have a wonderful day. Please like the video if you did. You can find me on X linked below, and a huge thank you to all of my Patreon supporters.